All right. What is up, traders? What's up, tycoons? Super excited for today's video. We are going to be taking a look at ICP. All right. This was a viewer request. I do these viewer requests every single week. So if you want to see your token in the next video, all you got to do is comment down below. Going to give you guys an update. All right. Now, initially on the last video, I highlighted this bearish channel that we've been trading in, all right, for a pretty long period of time. You can see that we've actually wicked out 2 times before. All right. We just here recently had a big explosion and rally, right? At the end of February, beginning of March, and we came up and we hit 8.18, which was a bullish price target, and we wicked out of this bearish channel. Now, look at what happened last time we wicked out of that bearish channel. We put in a head and shoulders, right? That we went over in some of my previous videos. And look at what we're setting up right now. See how it has a little bit of a lower left shoulder or a higher left shoulder and then a lower right shoulder? We're doing the same thing right now where we have a left shoulder here, lower left shoulder, and a lower right shoulder right here. So it's going to be really interesting to see, does this pattern repeat itself where we have this head and shoulders? Now, just because we have this forming, it's not confirmed yet, okay? If we zoom in a little bit more, we do need to break this neckline right here. Essentially is where we need to break this white trend line right here. All right, and we do have a small demand zone in between here that we've been bouncing off of here recently. All right, now the demand zone is going to be your key area of support. That's about 4.63 down to about 4.35. All right, that's going to be your demand zone there. And then overhead, we have some major resistance levels here. We have 6.827, 6.389, and 5.951. If we can break above these levels, then we have a possibility of retesting our previous highs and even putting in a higher high and getting a breakout of this bearish channel. Now, the reason that these 3 levels are the ones that we're looking at is these are our Fibonacci retracement levels. And you can see in the past that they've worked very well for spotting trend continuation versus trend reversals. Okay, so for instance, we have a swing high up here, and we have our swing low. We move down, we retrace up near the 38.2% retracement level, and then we continue that trend and put in a lower low, right? And then we retrace up again to the 50%, put in a lower low, retrace up again, this time to the 61.8% level, and then we continue that trend and make another lower low. Right, and we continue doing this, rejecting our fib levels, this time the 50%, heading lower, until ultimately when we broke out past these retracement levels right here, we got the reversal where we put in a high, and then now we put in a higher high. And that's what really started the bull phase right here that we had in the beginning of 2023, in the beginning of the year. Okay, and you can also use these for support, not just resistance. So afterwards, right, you can see that we had, a really nice rally up here. We got a pullback, but it was just a healthy retracement near our 38.2% retracement level. And then we continued up higher, hit some of the bullish price targets, wicked out of that bearish channel. And now we've started to pull back. Okay, so now after this pullback, these are going to be the major retracement levels of resistance that we need to break above to really get any type of a chance of reversal. Ultimately, we could, rally all the way up to these levels, but if we reject them, most likely we're going to continue heading back lower, retest some of our previous lows, or perhaps create new lows. So definitely keep that in mind. Now, if you see, we also have this white dotted line here. This is the basically the middle of this bearish channel. And so we are bouncing off of this over the past week or so. We've been using it as a valid support level. All right. So it's going to be interesting to see, do we continue to ride this right as support and try to head back up to our major retracement levels? Or if we break this, most likely in the short term, we're going to come back down and test this demand zone. And keep in mind the neckline for our head and shoulders. If we come down and break through this neckline, most likely we're going to come back down and test this region right in between here, which I'll give you the price levels, but it's basically going to be about 3.674 all the way up to about 4.18. Okay, so that's really the area where if this head and shoulders breaks and we get a breakthrough, those are going to be some of the price targets for that head and shoulders to look to complete at. So keep a close eye on it. All right, be patient right now. You can try to use this as a support line, that the halfway point of that little of that bearish channel. Okay, and maybe have a stop loss below there. You know, I really wouldn't recommend, you know, going too heavy in anything right now. You know, the Fed is about to do their speech today and do their rate hike today at the time of this recording. So, you know, that's going to be a big catalyst, and that could send things back into another risk on market phase where we see another big rally, right? That's definitely a possibility. But, you know, you never really know how the markets are going to react to these. You don't know what Jerome Powell is going to do for sure. And if he somehow comes out hawkish and tanks the market, then we could end up seeing that head and shoulders play out. So I'd wait a little bit more, let things try to develop some. Look to see if you can spot any signals. Currently, there's no really bullish divergences or bearish divergences, you know, on the RSI. So I'm not really covering that in today's video, as you know, there's no major divergences that I really see. But I do see a possible head and shoulders forming, and you know, it could play out though like it did the last time when we wicked out of the bearish channel, and then we ended up putting in a head and shoulders and getting a big move down. So definitely just be prepared for any downside moves. Stay safe out there, and good luck on your trades.